So glad you could join us. I'm Marlin Bohling with you as we keep an eye on your ag commodity trade here on a Monday. I am joined by Chris Swift of Swift Trading Incorporated here in Nashville, and he joins us in studio, and always a treat to have you come in.
Thank you.
You had a good weekend?
Oh, I did indeed.
All right. One of these weekends we'll have the sunshine.
Maybe so.
Someday.
Someday.
Maybe not next weekend, but we'll work for it. By the way, don't forget, time changes next Sunday.
It does,
already.
doesn't it? Give us another hour to
Hard to believe.
do whatever.
It's already here.
Yeah.
Hopefully the weather cooperates. All right, let's take a look here at what's going on in the grain trade. We had the corn market opening up firmer this morning, and we did have an overnight export sale. We'll take a look at it in a minute, but we have May corn 4 higher at 377, and December up 3 3/4 at 398. So kind of holding right where it opened here so far today. As I mentioned, we had an overnight export sale, and it was a sale that was to Colombia. Don't hear from Colombia purchasing corn a lot, but it was this time, and 100,500 tons are credited to them. So anyway, we thank them for that business. Now we look at our soybean trade, and soybeans were about 6 cents higher overnight. Well, they're not anymore, and this time they're doubling down on that. Now we're 12 higher, 12 3/4 higher on the May at 9.24 1/4. September up 11 3/4. We have that new crop November contract showing strong gains today as well. And last check, it was up 11 cents at 9.56 3/4 or so. There it is right there. Let's take a look also at what's going on with our wheat market activity. Now on the Chicago wheat, we'll focus on the May contract since March is in delivery here. May a penny and a half higher at 4.58 3/4. Kansas City wheat has been trading higher. We have the May contract 3 1/4 higher at 4.48. If you look at Minneapolis, though, it has tended to be weaker, and we're down 3 1/4 there on the May at 5.55 per bushel. Cotton market so far today, we'd have that May contract in there 25 points higher at 74.10. New crop December 33 points higher at 74.11. All right, your thought on the grain market so far today? What's driving it?
I think probably some more good news for the Chinese tariffs. I think that over Friday that Trump had announced that he would sure like to have the agricultural tariffs removed from China. So it's best out here. I think that the conversation between the two is going very well with the corn market and bean market having sold off last week, probably just putting some of that back on it again.
Farmers get so tired of hearing that story, though.
I know they do.
I mean, it's been unending for about a year now.
And it could be another full year that they have to go through this. I don't see much resolve just yet. I think there are so many issues out there that it will be difficult to get a resolve for both sides to draw a stalemate or an end to it or whatever the conclusion that they come to.
So one factor, we finally have something different to talk about, and that is mainly the fact that it looks like it's going to be a really wet spring.
Yes.
To try and get corn in this year.
A very late crop for early corn. So we started noticing the September contract and, thinking about corn down south when it really needs to be planted to meet delivery against that September contract. And it looks like everything's going to be just pushed back about 2 weeks.
Have you heard yourself of any problems down around the Gulf where they normally would have corn in by now?
No, I don't think so. I haven't heard of anything. It's just wet. It's just wet everywhere. The rivers are very swollen. A lot of elevators don't want to accept grain in just because of the river systems are so swollen right now.
Right. I hear that quite a bit.
Yeah.
All the way from the Ohio, all the way downstream.
All the way down. Yeah, it's pretty bad.
You're right. Okay, we'll come back in a moment and we'll take a look at our livestock trade too, if you don't mind.
Sure.
So stick around. We're talking with Chris Swift. We'll be taking a look at our cattle and hog market action when we come back after this. All right, let's take a look at what's going on in our livestock trade with help from Chris Swift of Swift Trading Incorporated right here in Nashville. He's in the studio with us here. So we go to the live cattle board right now. And we had an abrupt turnaround here, Chris. When I was on the air to begin with today, and I was watching the live cattle, I wanted to see how they opened. And, they opened a little bit higher. And by the time I came down on my next report to read the prices, they were like down 30 cents or something. And I thought, what happened there? Well, now April live cattle are down $1.18 at 128.38. They were as high as 129.80 after the open this morning, so that's about $1.50 turnaround already. June live cattle down 80 at 119.63, and you have August down 68 at 115.60. hold that thought. Keep
All right.
that in mind. Now,
All right.
looking at the feeder cattle trade, how are we opening there? We have March down 22 now at 141, so that's easy to do the math. We're 75 cents off our earlier high this morning. April now down half a dollar at 144.55, and that's at least $1 off of its earlier high today. May now down 15. The far out deferreds, oddly enough, are a little higher. If you look at the lean hog trade, well, this morning we have the April contract 98 higher at 57.38. And the May contract 67 higher at 66.60 per hundredweight. Nearby is leading the charge. The far out deferreds for late summer are actually a little bit lower, but they're already at a steep premium of about $20. So what's going on in the cattle market? We had higher cash cattle trade. We had higher wholesale beef trade. Started out a little firmer, but it's like somebody pulled the rug out from under it here about 10 minutes in.
Yeah.
Why?
We're still not moving any cattle. I think that the show list was still very much available on Friday afternoon. The packer came back and picked up the quality cattle at 28 and 28 and a half and left all the rest out there in the yard to continue to be dismal until prices start to come down just a little bit. So,
Really?
yeah, I think there's a lot of distressed cattle out there that need to be moved, and the longer that we keep them out there, then the more pressure is going to be applied, and the packer can cherry pick what he wants for the week, and then he just leaves the rest of them out there.
And, you know, I have to admit, I had forgotten about that, but the USDA is going to have an intermediary report coming up Thursday and Friday with their cold storage and their cattle on feed report, trying
Right.
to catch up on numbers.
Right.
So they will actually have their, I guess, their February numbers coming out
Yes.
now.
And the semi-annual inventory report came out last Thursday,
Right.
and it was not bearish. It wasn't bullish by any means, but it wasn't bearish. So I think that helped the market a little bit. And all of these issues are going to cause trouble when we get into the spring. And you see a little bit of consumer demand pick up, and I think we will take note real quick of what we are losing right now.
Do you think those kind of out-of-time reports are keeping the market off balance a little bit?
It's possible. It doesn't look like we've changed much in the cattle on feed reports. We're still trading about 2% above. We have noted for the last 3 months in a row that we placed fewer cattle. So that's kind of interesting that we're not placing as many cattle last year over year, than what we have before.
Interesting stuff. All right. And as I mentioned, we will get cold storage numbers too this
Yes.
week, but they'll be for February, so they could have
Just
an
a little
impact
behind time,
Could have an
so,
impact on the hog
yeah.
trade. So anyway, I just wanted to bring that up.
Sure.
Thank you for coming in.
Absolutely. Always a pleasure.
I appreciate it very much. Chris Swift of Swift Trading Incorporated right here in Nashville. So that's the